Okay, moving on from Mumbai to the high-risk, high-return world of private equity investments. PE funds in Indian real estate are toying with a radical new concept called apartment and inventory buyout funds. This is a scheme which sees private equity investors buy units in bulk from developers. Nikhil Narayan Sivadas has more.
The real estate sector may be moaning about low demand, falling sales and inventory piling up. But the sector's distress is an opportunity for private equity investors to make bargain acquisitions. And one such bargain is the inventory or apartment buyout fund.
There is lots of inventory, lots of it piled up, not selling unless and until there is a scheme or there is a subvention scheme or there is a pre-launch, etc., etc. So what's really being done now is that instead of selling 200 apartments to 200 different people, a fund is coming in place and actually buying those 200 apartments straight off the developer, obviously at a deeply discounted price.
Experts say developers are offloading their inventory at discounts as steep as 25 to 30%. Is it any wonder then that PE firms are scrambling to get a piece of this action? While Piramal Fund Management has the India REIT Apartment Buyout Fund, other players include the Aditya Birla Real Estate Fund and a joint effort by India Property Advisors Limited and Centrum Wealth Management.
It was a 350 crore fund with a green shoe option of 350 crore, and we actually garnered more than 500 crore in September itself. And of course, the balance 200 crore we will again start raising from January, and I hope by March we'll complete. As we speak, we have actually done 3 deals. One with Omkar, which is the Altamonte project in Andheri, in Malad, sorry. The second one is with Forum in BKC, and the third one is actually in Chennai with True Value Homes.
So what are the advantages to funds and developers alike? Here, the fund manager seals deals with developers to purchase or underwrite inventory at a deep discount, aiming to clock appreciation-linked returns when prices appreciate. Developers, on the other hand, get an assured offtake for the project and do not have to deal with as many investment conditions as a conventional PE deal. Developers can then use the investments to concentrate on delivery of the project.
The upside for the fund is that they are able to realize this exit in just 2 to 3 years' time. So you're not speculating in a greenfield, large project which may take 7-8 years to culminate, and then you take your money out and developers are buying it. They're actually entertaining these offers because instead of taking expensive debt, they might as well book sales through these.
With inventories continuing to pile up, experts expect apartment buyout funds to dominate deal activity in the real estate sector this year.
More than 3,000 to 4,000 crores have been raised by various funds for doing bulk buying apartment transactions. So you will see these funds getting deployed across various projects.
While industry experts continue to debate that trend, there is no denying that these apartment buyout funds represent a very real way for developers to offload their inventory and get in some much needed capital. Now, will this trend continue in 2015? We'll have to wait and see. From Mumbai, Nikhil Narayan Sivadas, NDTV.